Good morning, everyone. And while I know that Christmas isn't here just yet, but the Christmas season will be upon us very shortly, and as someone who loves Christmas very dearly to my heart, I'm going to share with you a little bit of a Christmas version of this morning's theme song to kind of get us started and hopefully a good mood as we head into the end of the year. So strap in and let's have a fantastic day.
Another day on the markets, approach with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Markets rise and markets fall, like sleigh bells ringing before the call. With bulls charging like a reindeer in flight, and bears hibernating on a snowy night. The angle will keep you in the fight. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Deck the halls with charts and graphs, where financial wisdom wraps in wreaths and laughs. In the Santa rally, watch it soar, with profits climbing more and more. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And we have a busy week in front of us, guys, a huge week as we mainly look towards NVIDIA reporting earnings on Wednesday, as well as we have November OPEX on Friday. No doubt it's going to be a volatile week, and we're already starting off on an interesting note with the SPY coming down to this level. I know I've talked about this on the program many times. 670.23 on the SPY. As you can see right here, we're getting a little bit of interaction, giving up this gap up. Let's zoom out a little bit from the pre-market. This gap up to 670.16, grinding all the way down 6 points. It has been a painful pre-market if you are a bull, unfortunately. It has not been fun. Interestingly, along with this, IWM is also at a key support level right there at that 636.27 level, which you're not really out of the woods here on IWM, still lacking behind your 50 MA on the daily. And looking at the Qs, you're kind of sandwiched in between this zone here as well. Right now at 607 in the pre-market, you're above your 50 MA, but not by much. So we're getting a little bit of a retracement off of Friday's price action. So we'll see if the bulls step in today and bring things to the upside. Good morning, Hatchet in the chat, and Eddie dropping the you're in the chat. Good morning to you guys. Hope you guys are doing well. Let's take a look at what's going on and what happened over the weekend. Mainly the thing you want to keep an eye on, and what was, I guess, the big news was Google getting a really big bid. Let's zoom out here and go to the pre-market, and you can see the gap up there. Google getting a really big bid, mainly due to the fact that Berkshire, might be saying that wrong, Hathaway has invested into, really Warren Buffett's fund, right, has invested into Google at essentially all-time highs. Now, I want to make it very apparent, because I'm seeing a lot of people have opinions on this, that Warren isn't really this is not Warren's trading style. It's not really, he isn't involved per se. He might be involved to some degree, but this isn't really his trading style. So this actually could spark some interesting change for one of the biggest, typically more conservative funds that we've seen out there. So this is probably this is the reason why Google's getting a nice bid up here in the after hours from Friday, in the pre-market now coming down a bit, really echoing the sentiment of the overall market like we alluded to at the beginning of the day. Looking at our VIX right now, we're pretty elevated, all things considered. 21, I really hit 21, yeah, basically 2098. Really don't think we should be this high, and I had a whole shtick on this, so we're going to talk about this in a little bit later into the show, but why I think fear is overblown to a very large extent, and what I'm looking at here in the near term to the end of the year. And a lot of you guys know, if you've watched the program, I have a price target of at least 700 by the end of the year and 770 by Q2 on the SPY, so another 100 points from this specific point on SPY by Q2 of next year. I'm going to talk about that a little bit more in detail as the market opens, as we get into things. I do want to remind you that it is Monday, so please make sure you are taking a little extra caution if you're looking to open new positions on a Monday, or realizing those positions, as IV and volatility tend to be higher on a Monday morning as opposed to other mornings. Now, before we get in too deep into anything, as I like to do with you guys, I want to go over our Catalyst Watch for the week. So we're going to pull that up right now. As I alluded to, NVIDIA on Wednesday after hours is going to be the big thing you want to keep an eye on this week, as well as, well, really it's a full week catalyst, I guess, when you think about it, November OPEX. So there might be a lot of positioning, repositioning with the overall market that you want to be a little on your toes, for lack of a better word, this week, as we could see a lot of movement there. This morning, right at open, right now, and through open, we have two Fed speakers. We have William and Jefferson speaking. And then for the rest of the day, actually, I didn't see this earlier. Trump's set to speak at 2 o'clock. So you know how I feel about that. We'll see what happens. And then you have two more Fed speakers towards the end of the day. Kashkari, I always say his name wrong, and Waller towards the end of the day. And then Trump is speaking again tonight at 6 p.m. So he has two speeches scheduled today, one at 2 and one at 6 p.m. Looking forward to tomorrow. If you're invested in Home Depot, builders, lumber, etc., they have their earnings tomorrow morning at pre-market, so keep that in mind into after hours or into the market close today if that's something you personally have exposure with. Why this is especially important is because we also have the housing market index data coming through tomorrow at 10. So you kind of have like a double whammy there if you have exposure to real estate or lumber, anything with building, right? That's what you're going to want to keep an eye on, as those two reports, or that two bits of information could be very important if you have exposure to that index, or that part of the market, I guess I should say. I got another Fed speaker tomorrow. For the rest of the day, though, pretty quiet. Looking forward to Wednesday. Not too much in the early morning. We have FOMC meeting minutes at 2 o'clock on Wednesday. Typically, it's not a big deal. It can be an event if anything is mentioned in the minutes that wasn't necessarily already kind of covered by Powell or answered in terms of a question, or mentioned by literally any of the other Fed speakers that they just ramble on all the time. So I don't anticipate that being a big deal. But, you know, anything can happen. So at least be aware of that on Wednesday. You do have the Williams speaking again at 2 p.m. on Wednesday. And then the NVIDIA earnings call, as I already alluded to 2 or 3 times already, is going to be after hours on Wednesday. Looking forward to Thursday. We have non-farm payrolls and jobless claims. To be honest with you guys, I don't know if we're going to get that information because we didn't get CPI, and that really shocked me that we didn't get our CPI data. It's very, how do I say this, third world country of us. So is this data included? I don't know. I'm assuming this is all gathered by BLS, so I assume that is data we're not going to get, but it's scheduled to release on Thursday. We will see what happens. Who knows? I wouldn't hold my breath either which way, but something to be aware of at least. And we also have existing home sales at 10 o'clock on Thursday. So again, if you have interest in real estate, again, lumber, anything with building in general, Tuesday, tomorrow, and Thursday are pretty big days for you this week, all things considered. Rounding out the week on Friday, a bunch of Fed speakers and European banking speakers, members in that early Friday morning. You also have PMI, and you guys know I love this, Michigan sentiment. And on cherry on top of everything is the monthly OPEX, as I already alluded to at the beginning of the day. So really a very busy week. Obviously, Wednesday is going to be your most volatile week. Depending on your exposure, we have a lot of housing stuff. So Tuesday and Thursday could be a big days for that corner of the market. And then depending on what Trump says today, that obviously could affect which way the wind's blowing here. But all in all, Wednesday's a big day and we have OPEX. So outside of that, all in all, we don't have a lot of catalysts. We have fewer number of catalysts, but the catalysts that we do have should be at least perceived as larger. So that's kind of how you should view things this week. Now, as a betting man, as we look at the market here, I really, 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 really want the 670.23 to hold into the open and at least get a quick rally off of here. Looking at our other mag names, it's not looking too fruitful there, at least for the mag 7. But ideally, we need to hold this level, especially through Wednesday. Under this level, that's why I put this as a big red line. This is basically your bull bear line for the spot. Keep it real simple with you guys. Above this, you're bullish. Below this, you're leaning more, you're leaning more bullish above, you're leaning more bearish below. So above this line, market will be more bullish, or at least the wind will blow that way, as I like to say. Below this line, the wind will blow more bearish. We'll see. I personally did not anticipate, I didn't necessarily anticipate a gap up, but that's mostly due to Google. I didn't really anticipate getting a sell-off here in the pre-market. So we'll see how we open up here in the first 15, 20 minutes if we kind of get another one of basically a snapback rally like we saw on Friday. But we're in a pretty tight pinch here. That key level and the 50 MA on SPY currently sitting at 66815. So we could one of two scenarios. We either open and rally above 670.23 or we get pinched between the 50 MA and this 670.23 area. Obviously, you can tell by my tone, I would prefer if we stay above this area and rally to the upside here and keep as much froth to the upside as we can pre-ER for NVIDIA. But under this area does support a narrative of a potential chop on the market, at least today. Volume's going to tell us what's going to happen really as we get into the day. But at open right now, these are the two outlooks I have. I wouldn't necessarily be aggressively short. We're going to talk about this later in the show. But essentially how the market's leaning right now, VIX is, in my opinion, too high considering the daily price action for SPY, and the amount of fear that's in the market is too high considering where we're sitting on in the market. So we're going to talk about that in a little bit, so make sure you stick around for that, especially if you want some longer-term outlook on the market. Guys, we got about 2 minutes, minute and a half before we get into market open. Do me a favor if you haven't already, wherever you're watching, whether on YouTube, Instagram, X, Twitter, which is already X, so I just said that, Kick and Twitch, interact with the stream in your favorite way. Drop a comment in the chat. I'd like to say hi to you guys. I'd like to talk to you guys throughout the stream. So if that's your way, feel free to do so. If you haven't already, like the stream, especially if you're on YouTube, please do me a favor and support the stream in whichever way is your favorite way. Any interaction is greatly appreciated, and I thank you in advance for your support. And if you haven't already, pop on over to the YouTube channel. Once we hit 500 subscribers, this show will be a daily, everyday show. So if you enjoy the content, you want more, all you got to do, go over to YouTube, hit subscribe, totally free. And I appreciate your support for the program. Good morning, Toby and EB. Thanks for coming to hang out this morning, guys. Hopefully we have a good day. It's going to be a good week. I have a feeling it's going to be a good week no matter which way the wind blows. We're going to have a good day. We're going to have a fantastic week. But I'm really locked into seeing what's going to happen here in the first 15 minutes. I think it's going to be a volatile one. So we have a chance of either getting stuck in the shop, which we don't want to see, or we have a chance of moving to the upside. So as we get near the market, let's get ready to start the day.
The market is about to open. It's time to start the day.
Alrighty, guys, the market is just about to open right now. 3 seconds until the market opens. Looks like we're going to open just shy of 670, a few cents below, opening up at 669.60, just about there. and looking like we're going to try to push to the upside right now. If we could see this lower LOI hold a support, that number is 66937. Again, I will strongly remind you to be very careful on Monday opens, especially on gap ups or gap downs, as IV tends to be much higher. So if you're a day trader, unless you're quick on that, you got to be very, very careful. Unless you're also selling options where they could actually benefit you, IV tends to be higher on market open 9 times out of 10. So please keep that in the back of your mind. Toby saying Google pre-market volume is insane. Yeah, mainly we talked about that. You probably came in just a little late, but what happened with Google essentially was Warren Buffett's fund said, hey, we're buying Google at all-time highs, and people probably saw that as a huge buy signal. And right now, as we look at our other Mag 7 names, all are red except Google. So we could see some general rotation out of other Mag 7 names to shove it all into Google, which could be part of what we're seeing here. I think the Qs will tell that story a little bit more cleaner, depending on price action. So if the Qs move to the upside or just chop sideways, they're going to give us a better inkling on if that is actually the case, if money is just rotating between the Mag 7 names, which I actually highlighted as a possibility last week. Now, I didn't predict Berkshire to purchase some of Google, but I'm just saying the money in the Mag 7 area, if you're invested in the Mag 7 names, looks like it's just going to rotate around the other Mag 7 names. So that's what I'm trying to say here. HR dropping the Ayo, my friend. Good morning. Hope you're doing well. Right now, SPY's is a little heavy on the open here. Again, the numbers to watch this morning. 670.23 is your big line in the sand on the daily. That is going to tell you whether to be a bull or a bear. Again, on the daily chart. We're only a minute or two into the open here, so don't hold your breath either which way just yet. The level to the downside to watch today, and I'll put a line on my chart so you guys can see it. 668.60. That's going to be your 50 MA, which is a very important level. 668.60. That is your 50 MA. I'll make it purple. Lock that in. And we'll make it thick. There you go. So that purple line down there is your 50 MA. So the two probabilities, like I said, for at least the first 15 minutes of open. One, we get stuck in the chop, so to speak, especially with this LOI in the middle where we just kind of ping pong 670.23 to 668.60. Second, which is what I would prefer, which is looks like what we're trying to do, is to break above the 670.23 and spark a rally to the upside. So those are our two probabilities here on market open this Monday morning. I do believe bare minimum the gap will fill to the upside. What happens there is to be seen. And the gap fill on SPY is, what did we close at? 67193. 67193. So in the middle of these two LOIs up here, just about 30 cents above this 671.63 fills the gap from Friday. Currently where the 200 MA is just about on the 1 minute chart. So either way, no matter how you slice it, you're either getting stuck in the chop down here or potentially a chop here for the gap fill. So what I'd look for a bull confirmation on the day is to spark a rally above the gap fill. That is what I'm most interested in on the day. And I don't want to lean bearish at all unless we get a hard rally and I'm looking to time it to get some level of retracement. Those are the moves I like to take if I do take a bear position, which at that point you typically trade like a 0 day or something quick where I can make the most money on a short amount of time. But on this open, let's look around and see what we got going on here. NVIDIA coming down, trying to rally back above this 186.21 LOI. Looking at how it sits right into open, we're probably going to get sandwiched here. You're probably going to get your, what I like to call an EMA sandwich, where you get your long-term EMAs and your short-term EMAs and prices in between the two. So right now, the 50 EMA is roughly where NVIDIA is sitting at 185.97, so about a buck higher, or sorry, 50 cents higher than current price. And the 8, 13, and 21 EMA are all kind of congested around 191, right? And you also have this LOI here at 191.05. So if I'm a betting man, NVIDIA pre-Wednesday sits in this range. It sits in this 185-ish to 191 range, the $6 range, and ping-pongs around in here until Wednesday happens, and what happens from there happens from there. Google is looking like it could try to breach all-time highs today, getting some nice push here, up 4% on the open, getting a nice little rally here, and it might just go. He's trying to soak up all that pre-market fall, which if we look at Friday, where's Friday's close? Friday's after-hour close, 287.62. So we're already above Friday's after hour close, which is a very bullish sign considering the price action. You only got about $2 here, $3 here, which it just might go to break the. Well, is that really the all-time high as well? That is. Whoops, that's an old drawing. That is all-time high. So in the actual hours, right, the normal hours, 292.01 is your all-time high. If we include the pre-market, 292.98. So we'll call it 293 for simplicity is what you're looking to see if there's strong bull momentum in Google. Not like you could say there isn't right now, but I mean on a longer term time frame, especially if you're seeing a more conservative investor, right, open up a long position up here, that's going to get some people's interest. You got this red SAR on the daily as well that you could crack here and break to the upside. I think the market's just going to want to push Google to 300 real quick, to be honest with you. You're basically forming a triple top kind of look here, so that breaking to the upside would be pretty eventful. So that's where you could probably see a lot of strength today. SPY right now near the gap fill, so we're going to see what we get here. We're just shy of the gap fill. Now, keep in mind, you have this LOI here, 671.63, and the 200 MA, this dark blue line here, which are going to act as some level of resistance. Google is going to try to lift all the ships on the Qs, as you can see here, and the Qs are also tapping your 200 MA. I actually have an alert here too, an old alert. So this is some level of significance here. So we'll see how we react here. If I'm a betting man, we anticipate a short-term rejection unless it's still early. So volatility can push high, volume can push hard. So we could get just a continued follow through here. Microsoft getting a nice little rally, probably getting some love from Google. Meta not feeling it just yet, nor is Apple. Tesla is doing pretty good, coming off more than likely some Google hype here, at least helping push the Mag 7 up. Amazon is not, interestingly enough. Amazon is a place where I'm looking to actually start to consider opening a long position in this range here, right around here-ish. Not yet, here-ish. This is the area where, depending on price action, give it a few days or so, that's where I'm interested in considering a long on Amazon. So it's something to keep an eye on. Let's keep an eye on the VIX as well, see how we're reacting here. Gapped up on the VIX. Well, I guess technically not a gap up, but you get what I mean. A gap up from Friday's close. Here, I say that. And now kind of grinding down. So the first level you're going to want to crack here on the VIX is 2030. And then that opens the door for a decay down to 1830. Remember, whenever you're in these two ranges where you're so spaced out in terms of your LOIs on the VIX, you can get a quick move either which way. So this could spark a decay, which could spark a continued rally on the SPY. As we're watching in real time, the SPY has officially filled the gap and getting a nice push here on the gap fill. So this is what we want to see. Now, to be fair, we're already kind of hot to the upside. So in a perfect world, we get a little bit of a back test and then a push. But I'm also not going to be mad if we get into this cluster up here. So you see I got 4 lines here. That's going to be an area of support resistance. Get into there, chop around, basically build like a high and tight flag, and then push again. That would be ideal. We'll see what happens here momentarily. Let me just check on some of the names I'm long, see if I'm missing up anything. If I'm missing anything fun just yet. Not really. No, nothing there. Oof, okay, that moved up. What happened? So kind of a mixed bag on like your small mid-cap names. And that's, again, like I tell you guys, I like to look at IWM for sentiment, which we're still red, but we're covering. And I like to personally look at my long holdings, selfishly, because it's a really good mix. What I like to long is a good mix of short, medium, and large cap stocks typically. And how they perform also gives me an idea of how the overall market's looking, because obviously these are charts that I'm bullish on if I'm long equity on them, right? So seeing how they perform and comparing that to the overall market where volatility is sitting gets me more of a complete picture, at least for me. And looking at my long equity, it's a mixed bag right now. So I'm seeing red and green. So a lot of this rally right now obviously sparked by Google in a large part. And the Qs obviously carrying the 3 indexes right now. However, IWM is looking like a good flip red to green here pretty soon. So that's a good sign overall. So not an open to sleep on, but also not one you want to necessarily rush directly into either. So take the good with the bad here. Ooh, wow. Okay, hello. What? All right, hold on, I got to pull this up real quick. I was saying how I'm not too crazy about anything. Look at PAX right now, up 33%. This is a company that I can't even close my position. I've got a a what's it called? Put credit spread on right now that I can't close because the spread's so crazy. Currently up 32%. I've got a what was it? What's it? A 10 and 1250. So I'm short the 1250 put. I'm long the 10 put on PAX. Currently trading $14. Woo! What a beaut. So hopefully if that consolidates, I can close some of that out. But that's looking pretty solid there. What'd you say, Toby? Toby said he didn't open up the position there, though. It's reported that he bought in Q3, which at the maximum price is $256, could also be $173. Yes, you're very smart to mention that, Toby. And a lot of people look at these reports and they just go, oh, buy. And you don't even know, like, especially with some of these 13Fs when they report, they could already be out of their position. So, for example, when Michael Burry reported how he's, like, short however much in Palantir or whatever, it doesn't, I don't care. I literally don't care what anyone else is doing. The market cares just because it's like, oh my God, the guy who did the big short is short the market. We're all going to die. Like, okay, feel that way if you want to feel that way, but I don't care because guess what? He could have opened the short and he theoretically could have closed the short on the report of his 13F. On the report that everyone now knows that he's short, the market drops Palantir or whatever, then he could just close out. Like, that goes for any hedge fund report, any manager saying I'm long, short, whatever. Unless it's in real time, I don't care because it means nothing at all. It is just hot air because like Google right now, yeah, we're reaping the benefits to the upside, which I'm not going to complain about. But like Toby just alluded to, the max price that they could have purchased those shares at was $256. And the low, hold on, let's go back to Q3. Which is, so here, well, Q2 technically, right? Well, between the two. So this is Q3. Right, here we go. So, yeah, that would be the high of this candle theoretically. Even if we're being generous, and we'll go to the high of this candle, right? That'd be 275. And if we want to be most conservative, because we'll say they bought after Q2, right? The lowest would be 187. I don't know, I'm not sure where you're seeing 173, Toby, so I could be wrong unless we're looking at Goog versus Google. I know that sometimes that's a mistake, but either which way, it doesn't matter. It doesn't matter. Like, you should trade what you want to trade and follow your own personal thesis. And if you listen to someone like me or any other people on X or whatever platform and you like what they're saying, at least they're saying things in real time. I have way more respect for other people who are live traders, other people who chart live, other people who make live comments, because that has so much more weight in terms of if you have cojones, you're willing to say, I'm long here, I'm short here right now in this moment. This is bullish, this is bearish right now, not, yeah, guys, I've been a bear for a whole quarter. And then people react. It's silly to me. But to be fair, that's how the market makes its money. It's going to feast off fear. It's going to feast off hype, right? So this is how the market works. This is a really solid candle here on SPY. Why is this solid? We talked about this. Right around that 200 MA on the 1 minute is where the gap fills from Friday. So Friday's close. So we've now come up. We've rejected right here basically on my LOI. Pretty cool, right? 672.68 is my LOI. High a day right now, 672.67. Off by a penny. Pretty cool stuff. You should write these numbers down when I give them to you. Anyway, coming back down, a little bit of a retest here, back to that gap fill, and now trying to push up. So we should sit, like I said, a high and tight flag would be the most bullish thing, where we kind of shop around here just for a little bit before breaking into this range, and we want to see sustained volume through this range. As you can see, it's been 15 minutes. I've not done anything. I've not opened up a new trade. And I'm not really looking to be a super aggressive day trader this week, mainly due to what this week is. As I said before, this is OPEX week. Things can get very crazy, right? Things can just look at PAX. I mean, they reported earnings, so that's part of the reason why it's hot. Right now, it's up 31%. I showed you guys PubM last week. That was up 40%. And those are just individual stocks, right? But in general, you're in an earnings week still, you have the biggest company reporting earnings, plus you have monthly options expiration. So there's going to be a lot of money moving around today, tomorrow, Wednesday, and then the aftermath for Thursday and Friday. It will be a very, very, very volatile week. And what I stress to the members in our Discord community, which if you haven't joined, feel free to check it out. The link's in my bio, is to consider longer term trades, mainly due to the risk to reward. We'll talk about that probably in like 5 minutes or so. So make sure you stay tuned for that. I'm going to talk about where the real risk to reward could lay and why I'm personally not really day trading this environment. I'll be, if the opportunity presents itself, I'll take it, of course. But I'm more interested in potentially longer term outlook here in the near term, to give me more exposure to potentially even more upside. So we will talk about that in a little bit. Make sure you don't go anywhere so you don't miss that. Just checking up on things right now. I wish E-Trade had a dark mode. Does anyone know if E-Trade has a dark mode? I don't think it does. It just blinds me every time I open it. Actually, let's check that real quick. Alrighty. Guys, I'll make a deal with you because I like to do this with you now. It seems to get a decently good reception when we do it. We've got about 75 people watching, so good little group here. Let's do a like goal. Let's do an extension goal. So right now I've got, like I said, about 75 people watching across all platforms, but if you are watching on YouTube specifically, if we get up to 15 likes, we will extend the stream to at least 11 o'clock. Typically, I round things out at 10:30. So if you haven't already, pop over to YouTube, hit that like button. Like I said, if we get to, what did I just say, 15? 15 likes, we'll extend the stream. All you do is click a button. I know some of you just turn me on, pop me in your pocket, go back to work. But if you can take a second to hit that like button, I will appreciate it. We'll change this so I don't look for any subs. Let's change that to read. That's not right. Like goal, edit. We'll do 15 likes. Badoom. And we're not doing a power hour stream today, but we will do a 30-minute extension. 15 likes on YouTube. 30-minute extension. Extension. Did I spell that right? Looks funny. Don't you guys hate when you spell a word and it may not look like that's how you're actually supposed to spell it? Like, I know that's right, but I still have to check myself. Extension is one of those words for me. And as we spell check myself, that was enough fuel to enough positive energy to push the market into the support zone right now. So we're going to see what happens here. Now, because we're coming from underneath to above, it's more than likely going to act as a resistance. However, because like I said, we built this some level of consolidation here before pushing, this could lean to a more bullish outlook. Now, full transparency, I did open a long on the SPY on Friday around the close for 680 calls that are underwater right now, that I'm looking to see if we can get some love on potentially, because I wasn't really anticipating that grind down. So they're underwater, but I'm still currently long the market. Those don't expire for a few days anyway, so I have some exposure there. But I would not necessarily be short the market, which we're going to go into here in a moment. Just adjust something real quick. I'll do 2 of those. Made a little bit of a risky trade, but we'll see what happens with that. Alrighty, let me roll into that. Let's go into... I'll hide the like goal for now because I'm going to record this for you guys, in case you want to harken back to it. So NVIDIA's earnings are on the horizon this Wednesday, and there's a few things you should look out for if you're a bull or a bear on the overall market. Now, right now, it's Monday morning. We're in the market open, and we're getting a little bit of love to the upside after coming down from a big pump on Google, which is now reverting to the pump, making a new all-time high. So there's a lot of hype going into the market this week. Keep in mind that this week we'll also have OPEX on Friday, but I'm going to tell you guys why and what I'm personally looking out for here for this week and through to the end of the year. Now, although it seems like a very rough time in the market, and it might be when we look at how SPY is sitting right now, right? We're not having this kind of market that we've had where we just kind of more than likely just go up to the upside. We find support at the 21 EMA and just continue bouncing higher and higher and higher. But it's been a little bit more rocky here. And what I find very interesting about the SPY and where it's positioned right now is not only where it's currently positioned, but where volatility is positioned and where the fear and greed index is positioned right now. Now, I wouldn't necessarily use the fear and greed index as a means of hanging your hat on something super important, but it does give you an inkling on how the market, again, obviously is feeling. And when we see a very high fear rating, the market doesn't tend to be like 2% from all-time high. It's very bizarre. What else is bizarre is where the VIX is currently sitting. The VIX right now, at least on the day, sitting about 20, which all things considered is a bit high for the market. Now, through Trump's presidency in general, the market likes to float around a 14 to 15 VIX, maybe even getting into the 17s at most, right? We get pops and comes back down. But if you don't believe me, you can go back and look. Obviously, this is zoomed out and we get our big volatility pops and whatnot. But the market finds when it just kind of rallies to the upside, it's comfortable around again, 14, I'll extend it to 17. So the $14 to $17 range. And if you want to go back to Trump's last presidency, you can see that as well. That's kind of where volatility likes to sit, where it feels comfortable. Now, obviously, as the VIX behaves, we get pops to the upside, right, when the market gets some bad news, and then that typically decays back down fairly quickly. But because of where volatility is sitting, we're saying that volatility is a little bit higher right now than the range that I'm considering it should be in. So we're at least 3 points higher from the top of the range where I think volatility should sit. Now, what does this mean? Well, when you combine that and you combine that with the fear and greed index sitting at 10, 20, it's pretty low. It's high extreme fear right now. But the market, strangely, again, only down 2%, really sparks a very interesting conversation, I guess you could say, about where people really feel the market could go or is going right now. Keep in mind what the VIX means. The VIX is your sign of price agreement or disagreement on the overall market. So the higher your VIX is, the stronger of disagreement in SPX option spreads, right? The bid and the ask are wider apart, hinting more volatility. That's how the VIX gets its value. And as that volatility comes down, as those bids and ask spreads get closer together, the market feels more certain, even to the downside, right? That's why VIX and the SPY or SPX, whatever you want to use, isn't necessarily a one-to-one correlation. It can just signify how traders are in agreement or disagreement in the directionality of the SPY. So considering that, considering where the VIX is sitting, and considering where that fear and greed index is sitting, and considering what this week is and the end of the year is coming up, what we have rolling into the end of the year, we sit at a very, very, very strong turning point, in my opinion. Now, what that turning point really is at the end of the day, in my opinion, this is a dip to be bought. I'll be very clear, and that's not financial advice, obviously, but this is a dip I'm personally buying, and it's something you should consider as well, at least in my opinion. Here's why. NVIDIA reports earnings, and I don't think there's any doubt that NVIDIA is going to impress on earnings, right? They're more than likely going to blow earnings out of the water. They're going to have great numbers. But how great are those numbers is going to really tell if we see a bull move or a bear move on NVIDIA. But I'm going to tell you why I don't care. Now, what said on the conference call matters because that's going to affect sentiment of AI. That point matters. But what doesn't matter about NVIDIA is if there is even a hard fall or a hard spike, and we're saying, I'll say 10%, right? That's a pretty sizable move for an ER. Let's say there's a 10% move up or down. Hell, let's say 20. Because of NVIDIA's weight, it's roughly about 10% of the SPY. So even if there's a 20% move, that would equate to a 2% pop or drop on the SPY, which can be substantial, right? That's going to be $12 either way, roughly. Could be a big move, right? While I don't even think that's going to happen, I think how the Mag 7 names are sitting right now, any money that is seen as, I almost want to say dead money, if there's bearish action, that money will flow into the other Mag 7 names, causing a non-event for the overall market. I think today, and when the market opened, was actually a really good indicator of this. When we actually saw Google be green, and now it's making new all-time highs, but Google was very green, was pushing up to the upside, and our other Mag 7 names were sitting a little red. Now we're getting a little bit of green here, right? We're moving up a little bit, but our other Mag 7 names are sitting red, and that could simply be rotation between the Mag 7 names, money going out of Meta, Microsoft, NVIDIA, and into Google, but the same dollar effect on the overall market is roughly the same. What you could use to support or deny that thesis is your performance on the Qs. Now, obviously, the Qs are not just the Mag 7, but the Mag 7 are the strongest weight in the Qs. And if this number continues to be flat or up, that supports that thesis, meaning people are either investing more money in large tech or Mag 7 names, or if it's flat, while one name is green and the other ones are red, that can support the thesis of money just simply rotating in the Mag 7 name. So why do I bring this up, and why am I highlighting this to you as not a risk factor, but an opportunity factor for the end of the year? A lot of people are stoking hype or fear through NVIDIA's earnings, and I think it's really going to end up being a non-event, unless you're an individual investor, of course, but for the overall market, a non-event, good or bad, mainly due to this fact. Compound that with where the volatility is sitting, compound that with where general sentiment is, the fact that we are so fearful, which we really shouldn't be, and we're sitting at such an elevated price. I strongly believe that the market is setting up for a hard rally into the end of the year. Now, through this week, we have November OPEX. We tend to see a lot of repositioning, so we may end up having a choppy week in general. Right now, we're having a pretty good session so far, but we could end up having a very choppy week for the rest of the week. That's a very likely possibility as people reposition into the end of the year. But typically, as I'm not a person who typically believes in seasonality, I will mention that we tend to see more bullish price action through to the end of the year. So what I'm kind of highlighting to you guys here is this. At this point in time, or I should say at this point in time on my chart here, going back to, May, we had a decent, pretty hard rally. We came from about 570 all the way up to 689, almost a 200-point rally, right, on the market, or 100-point rally on the market. And it mostly just went to the upside. Ever since this one dastardly 3% day on the market, it has not been as clean to the upside, right? We had these 4 gaps in a row. They filled to the downside, and now we're sitting in kind of like this no-man's-y kind of land where we're right around the high of that really important Friday candle, but we're still sitting north of our 50 MA and our daily POC, our point of control here. This signifies to me, all this price action going back from the last month or so, a little bit over a month, signifies to me that we're in some level of price discovery and even arguably consolidation. Yes, that sounds crazy because we had this big gap up to the downside. We came back down. So the market is finding liquidity here, and it just takes the one move to the upside, the one push, to push it continuously to the upside to resume this kind of price action upwards. Now, the pessimist may say, well, you could make the same argument for the downside, and you could, but because of the conditions I've laid out and because of where we're currently sitting through all of the things I've highlighted here, I find that as a lower probability scenario, not only for your seasonality, not only for your VIX, not only for your fear and greed, not only for NVIDIA and OPEX, all these things I've talked about here in general, not only for just the technical point on SPY, they are 6 to 7 points that I've highlighted in this video on what would actually affect the market, what would actually push it bullish or push it bearish. And if you look at all these points, it supports a bull narrative more than it supports a bear narrative, at least at this current point in time. Now, the last thing I want to highlight to you, again, being more of a pessimist here, is taking a peek at IWM. Now, I personally use IWM as a sentiment driver. It gives me an idea of how the underbelly of the market is working, right? The top, or the 2,000 top largest 2,000 small cap names, right? Gives you an idea of, I like to think of it as the real U.S. economy, the real businesses that are working hard, because these are the companies that may not make any profit yet, right? These are the companies that need to borrow money to make money. And once you get big enough, too big for your britches in IWM, you move on to the Qs or the SPY. So you get kicked out, right? So that's why investing in IWM long terms can be a little sketchy, but I digress. How IWM's sitting here from a sentiment point of view isn't fantastic, I'll be honest with you guys. So again, if we're looking at the pessimist argument here, we're under the 50 MA, we broke under, you're forming a death cross here theoretically, but is that move overstated? I'm going to argue yes, actually. We've had a pretty hard, substantial fall from the 27th of October, which is about 3 weeks or so. And it's basically been a continuous fall. We're catching a little bit more volatility here near term, but it's looking like, not yet, but it's looking like the bulls are going to try to put in a bottom here on my LOI right here at 236.27. Use this as support to try to catch a rally to the upside. Your MACD's burnt out to the downside. You're seeing strong volume reactions at this level as well. This is kind of my trigger. So as a bear, if you want to get to look more bearishly, you want to see a high volume close. Keyword there is close underneath 236.27. If we see that, then we're more than likely going to see continued downside on IWM for about another 6 or 7 points here down to 229.42, which is the old all-time high. So you're going to want to watch that as your potential. Now, again, I am of the belief this won't happen. I'm of the belief that we'll actually see a little bit of a renaissance here in small caps and get a pretty hard rally. And keep in mind, the way IWM trades sometimes this thing gets a 3 or 4% day in one day. I mean, you can look at this candle right here. It's a down day, but that's 3%. This candle is 2% candle. This candle here is whatever it is, 3% candle. This candle is technically only a 1% candle, or 0.29. You get my point here from open to close. But IWM, this is a 4% candle. It can get a hard move both ways. So if there's any inkling of bullish narrative, if there's a bull catalyst that sparks things here, sparks excitement in the market, a 3% or 4% day, it won't take much to push IWM bullish very quickly. Then you're burning on all cylinders. Theoretically, on that move, the volatility would go down as well. Fear and greed would go back up. The market would probably push to the upside. Qs would probably continue to the upside. Those are the kinds of things I'm looking for here. So as we, I should say, in summary, looking at all these pieces, I would lean very bullish into the end of the year if you're betting either which way. I don't think now is the time, if you are a little bit fearful, to necessarily close out long positions. I'm seeing a lot of people online, on social media, talking about how they're liquidating all their positions. Things are overblown. Now people are flipping short. Not yet. In my opinion, not yet at all. I think there is a lot left in the market, believe it or not, and I'm going to say that this is basically just a cool down. I know it doesn't look like that, but considering all of the pieces of the puzzle here, that this is a cool down before we see a harder move to the upside. Last thing I'll leave you with, what I'm looking at here, again, in terms of invalidation of this thesis, right? Because I gave you basically a bull thesis into at least the end of the year. But we have to be honest with ourselves and look at both sides of the coin and what could invalidate that. The first thing I want to look for is a close beneath 236.27. You're definitely not out of the woods there. You're very close to that. That could be a sign of weakening in the market in general in terms of sentiment. The other thing to look out for in general is a close below your 50 MA on the SPY and on QQQ. Again, a daily close under these levels. Typically, I'll wait a day or two, so you could see a close under there and then a rally up the next day. But typically, I'll give it a day or two because we're looking at daily candles here, and it's a daily level. But that would give you another inkling that some more fear could come into the market, some more bearishness could come into the market. The last thing I'd look for here is on the VIX. If we see, now this would be one of those signals that's like a hindsight 2020 thing where it doesn't matter because it's already happened. If volatility breaks above right here, the high line here of 2309, you're more than likely going to get a quick mark up to around like $25.50, $26 here. Well, dollars, VIX, whatever. On the VIX, excuse me, a pretty strong markup. So that would also invalidate my thesis. I also don't like, so again, if I'm leaning more to the pessimist side, I don't like that the VIX is at this current level up here around this 2035, and it needs to come down sooner than later, ideally by the end of this week. The last thing to look at is your VVIX. Now, typically the market, if it is leaning more bullish, VVIX tends to be under 100. North of 110 is where you should be a little bit more concerned. Now, VVIX measures the volatility of volatility, so it measures how volatile the VIX is. This, again, is not a one-to-one relationship. There are periods of time where VVIX could be higher, and while the VIX is moving up, because there's a high probability of a sharp reversal on the VIX. So VVIX could go up theoretically as the VIX sharply reverses because the volatility of the VIX has increased, right? That makes logical sense. So take this piece with a grain of salt, but in general, you want to see VVIX sub 100 to support that bull narrative. If it stays and comfortably stays, so I'm saying a number of days north of 110, that could invalidate the bull thesis here. So these are things to understand, but also be very liquid with, be very, take all of the pieces together to understand if things lean more bullish or bearish. Ultimately, you're not going to see a strong signal, in my opinion, until next Monday or Tuesday. We tend to see strong positioning, especially in this case for the end of the year, after November OPEX. Typically that first 1 to 2 days gives us an inkling of how December OPEX tends to work out. So especially with NVIDIA on Wednesday and with OPEX on the end of the week here, those are the things you want to consider if you are a bull or if you are a bear on the market in general. What do you guys think on my little market outlook here? SPY back to the gap fill level. I'm guessing Google sold off a little bit. Yep. Nvidia getting a little bearish as well. Microsoft not looking great. So it's looking like all the mag names. We get news perhaps. Did we get some here? I'll pop that back up too. Boop. Did we get some news? Let's see. Yeah, let me know while I'm looking this up, guys. Let me know if you agree or disagree with my sentiment here. I'm open for discussion. I don't mind being wrong. I'm humble about it. We just got Fed Jefferson speaking at the moment. Oh, that might be it. What time did this fall? Let's see. Is it 9:56? It was. So, Jefferson said it is too soon to say what the net effect of AI will be on labor in the short term. The market does not like that. Because that could indicate, well, here's twofold. That could indicate a weaker labor market. But why that could be a bull catalyst is a weaker labor market means the Fed would have to be less restrictive, right? In general. So this is one of those things where bad news could be good news kind of thing. So we'll see. But obviously right now the reaction off that comment, you could check the timestamp here, right at 9:56 when he said it, you got a sharp little sell-off there. And especially through your Mag 7 names, which are also very strongly AI correlated, seeing that sell-off makes a little bit more sense. Toby says he loves the thesis rundown. Hell yeah, man. Glad you like it. Hatchet says, read today. We could be in Shopfest until NVIDIA. Yeah, Hatchet. I'm not sure if... Well, no, you were here right from the open. I said you have those two possibilities. So these are your chop zones for the day. I'll lay these out real clear for you. Purple line to red line. Red line to blue line. This blue line. Well, maybe a few pennies higher. So basically your red to green spot. So you could chop here. You could chop here. North of the gap fill, though, we're bullish. So that's what you should be looking at today in general. If we're north of the gap fill, we're bullish. If we're sub the gap fill, strong chance of chop here, strong chance of chop here, which is a decent range, to be fair. You got, actually, that's about $1 and change. This is about, okay, stand corrected. You got about $1.50 range here and $1.50 range here. So these are your two chop zones to watch on my chart here. Toby said, I agree with the end of year rally, but my concerns are high still. Yeah, I think a lot of people's concerns are high, especially as we see, like I like to say, like the underbelly of the market, IWM being weaker than the SPY and the Qs comparatively, right? So, even look at the price action of IWM. It is not as nearly as bullish by any means comparative to the Qs and SPY. And I'm sure just like a lot of you guys, my portfolio last week did not have a fantastic week. I did great with my options trading, but my long equity kind of got hit in the teeth a few times, right? Or certain names got hurt a lot more than others. And that's kind of why I like using IWM versus SPY, because of how heavy the Mag 7 names are. It kind of can skew how safe the market looks, how bullish the market looks. So that's why I think it's important to use IWM kind of as, like I said, the underbelly. You could also use RSP, so that's your equal weighted SPY. So this one might give you, let me delete my old box here. This will also give you kind of an idea. Wow, look at PAX. 43% on the day. Oh, baby. I don't think I can close that option. I think it's still going to be too wide, but that will probably expire worthless, which would be great. Anyway, look at RSP here. Very similar story to IWM, right? Just kind of super chop, right? You can put a line down here at 185. You don't even go that high. You'd call it 185 to 190, a $5 range here on RSP, and that's been sitting here since August. So about a quarter now, just kind of chopping. So your concerns are valid, and I would use some sort of intermediary, I guess is the word I want to look for, like RSP or like IWM, to kind of give you an idea of underlying strength in the market, how the market is actually doing, right? Hatchet says, I'm hopeful for bullishness towards the end of the year. I think we'll get a cut and also some liquidity coming into the market. Off the topic on that, you have to keep in mind, excuse me, that the Fed is going to stop QT starting December 1st. So that theoretically should pump more liquidity into the market as well. So many arguments to be made in every direction. SPY right now just broke down into our we'll call it chop zone A right here, this red line, which this is the most important level, guys. 670.23, you want to close above this level. Anything beneath that level on the daily chart, we push more bearish. Purple line, again, as a reminder, is your 50 MA. So as I laid out to you guys, the two chop zone potentials for SPY today, this red line to this blue line, essentially a few pennies higher, and this red line to this purple line. That is where the two tight ranges, and these are, again, about $1.50 in range both ways. Not really a spot you want to trade in. If we can stay above, then being a bull will bear more fruit, is what I'm trying to say. As you can see here, when we filled the gap, almost had $2 to the upside. So it's going to bear a lot more fruit than being in this either chop range here of $1.50 and having that uncertainty of direction, right? So my opinion, I would lean more bullish on the day in general, but I would wait to be bullish north of the gap fill before getting too excited either which way. Let me just check on things here. Now that we're seeing some downside. I can't believe PAX blew earnings out the water like that. Ooh-wee, 15. Should have got some equity. I did not. I only went options, but oh well. Oh well. There we go. Okay. Cool. There we go. Alrighty. Q's on the red to green spot here. You're iffy in general. I'd be careful here. VIX getting a little bit of a pop here. I think that's... No. I was going to say I thought it was the high. 21.21 is the high. Again, under that 2030, we do open the door to a potential sustained VIX decay. So what we're looking at here, if I'm a bull, remember there's not a one-to-one relationship, but they tend to. VIX go down, market go up. VIX go up, market go down. Tends to be the case. Look for higher lows here. I'm sorry, lower highs. Look for a lower high here and go back down. And if we can make a lower low, then we have now established, theoretically, a trend on the VIX to decay on the day at least, which would support a bullish narrative on the day. Here we go. Quick reversal here on the SPY. Good volume here. We're finding good volume, which is nice to see. And we're back at the gap fill. So we need to find more volume here to push to the upside if I'm a bull on the day. Volatility getting hit a little bit here. VVIX still pretty elevated, all things considered. Oh, I didn't talk about why you should day trade or why you should swing trade more than you should day trade right now. All right, so we'll talk about that real quick. I think there is far greater opportunity right now as a swing trader than a day trader. This is coming from someone who day trades almost every single day, right? If I am taking day trade positions right now, there are one of two things: one, lighter size, or two, I should say they have more time. You can still establish a day trade position for end of the week contracts, next week contracts, whatever. Giving myself a little bit more buffer in terms of extrinsic and intrinsic value, right? So, if I do open a day trade, it's one of those two or both of those scenarios. Because of that whole little spiel I just went on, and I've recorded that, so I'll be uploading it, I like the exposure for at least December OPEX contracts, ideally January and February exposure in terms of contracts. So if I'm buying directional calls, right, I like that exposure mainly due to the fact that if we do see what I want to see, that allows me to catch a bigger fish here, right? That allows me to catch the meat of the move. Now, of course, there's an argument to be made where you could play shorter term contracts, roll profits for longer term contracts. There's nothing wrong with that. You roll out, and you could do that too. But I would rather establish positions in moderate to high delta contracts. And again, it's very stock specific, right? Certain stocks you may feel a little bit more aggressive on, a little bit more bullish on. Some of them you may be a little bit more conservative on. But I would target at least 30 to 50 delta options, if you're looking at call options, for ideally January to February. December ones obviously could still work very well. And you're playing the game of balancing premium too, right? Like, how much does this cost? How much can I make? So obviously look at your Greeks. But in general, I want to have that flexibility of time on my side. Because of where we're sitting right now, we could kind of get a little bit of sideways chop action in general this week, obviously. But we could even see a little bit of that at the start of next week. And if I believe in this larger move, if I have a strong thesis for a larger move on the market, a lot of that money is made in the overnight sessions. I'm sure a lot of you guys know this. So not a lot of money is made intraday. It can happen. Sometimes we have big rally days. Sometimes we have big fall days intraday, right? But the lion's share of the money is made overnight. tend to made overnight with gap ups and gap downs. So through the rockiness of things, I would rather have some longer term exposure at this current juncture of the market where that offers me that flexibility of I can catch, like I like to say, the bigger fish. If I believe in a bigger move on the market, if I believe on a bigger move on an individual name, I mean, look at Google, for example, right? Let's say I day traded Google or had a short-term contract. Well, I guess in this case, a short-term contract would have been great. But if I traded Google and I only wanted to day trade it or whatever, and again, this is a situational thing because there's news with Buffett and whatnot. It closed out the day around 276. Now, if I had a swing contract, if I had one that was expiring in December or whatever, I could reap the benefits of a $15 move. Versus, and again, this is just giving you an example here, versus day trading it now, today, or for example, day trading it for theoretically pennies, like not a lot of money, on Friday, and then coming back today and day trading it again, which, you know, you can make money. I'm not saying you can't because, like I said, I like to make my money day trading. But having that swing exposure and then also day trading if you want, like, to supplement that swing exposure, I think is where you're going to find a lot of money to be made from now to the end of the year. You could do this with equity. You could do this with long call options. You could do this with spreads, whatever your flavor is, whatever you like to do. I think it's very wise at this juncture. Now, there is a little bit of risk involved here, but hey, the cringy thing to say is no risk, no Rory. But you can also say no risk, no reward, right? This is the time, in my opinion, to take a little bit of risk, mainly due to the fact of, again, everything I just said in that video with volatility and where the market's sitting and everything, where if you're right, you will be very right. You will see a hard move to the upside. A lot of things will probably move overnight. In general, you should see probably some level of gap ups, quick volatility decay. It's the time where if you give yourself enough time for that move to work out, and again, if you're equity, you have no concerns, that you probably will be pretty happy, at least through the end of the year. January through February can be a little tricky, and obviously I can't predict the future, but a month and a half from now, anything can happen. But as we sit right here, at least through December, I still sit very bullish, as I've said all morning today, and I still believe we'll see that at least 700, so at least 30 more points here, or 5%, right, on the SPY, maybe less, on the SPY to the upside here. I think that's very likely. But I think the lion's share of those gains will be through the overnight session. So things to consider here if you are a trader and if you're an investor, right? These are things you want to weigh in your risk analysis. Let's take a peek here. We've got 9 likes on the stream. I've got 81 people tuning in. So don't forget, guys, if you want to attack on another 30 minutes on the stream, all you got to do is pop over to YouTube, hit that like button. If we get to 15 likes, we will go to 11 o'clock. Otherwise, we're going to round this out at 10:30 today. Looking like we're getting a quick rejection here at the gap fill, which is not ideal. But, you know, we got to take what we get here and see where we go at this moment in time. Alrighty. IWM is looking a little better. So as we're seeing a tiny bit of questionable price action here on the SPY, we could be forming a little bit, if we're looking at a microcosm here, of an inverse head and shoulders, right? Some level of consolidation, sweep the lows, consolidation before pop to the upside. Right, if I'm leaning bullish, that's why I like. MACD could be looking to flip here. RSI is a little bearish. As you guys know, I use RSI as a momentum indicator, not a overbought, oversold indicator. So I'd like to see this number over 54. That tells me bulls are in control from a risk standpoint. Same kind of story here on the Qs, but comparatively, IWM is looking a little bit better actually. At this current point in time. So if we could see a little bit more volume here and a break, it would be pretty solid here. So I'm very trepidatious at this point. So we made so this isn't good if I'm a bull. We made a higher low. So now for those of you that like shapes, we're forming a pennant here. So you have lower high, higher low. So you're going to get a volatility break one way or the other here very soon. If we draw a little doodle here. If you guys like lines, quick line there, whatever. 2 touches. Do another quick line we'll just use here. Won't use the bottom of that one. There you go. Pennant. There's your shape. All you shape lovers in the chat. There's your shape. So what you're looking for here is a break to the downside here. But if you want to make it real simple, you don't want a higher high if you're a bull, because that sparks that volatility could mark up. What you want is a lower low, keeping it very simple. This is why I don't like drawing shapes, because it can lead to a bias in general. I would rather just look at the candles, but when we form shapes, we form shapes. Because now someone might go, well, look, we broke the pennant. That means volatility is going to mark up. Not yet. You want to look and see if we can break over this high to confirm a potential markup on volatility. So you could get false signals when you draw shapes. Granted, this was a quick and dirty draw, but that's why I don't like shapes. Off the back of that, the market is back down at this LOI, so we're invalidated that little mini head and shoulders that I was highlighting there. We're finding support above the 670.23, that very, very, very important LOI, and we're finding support at 670.57, which is nice to see. Leaving 3 wicks here, so we're finding support higher than we should, which is good. Now, this is still a significant level, that's why it's marked out, but finding that support pre this like major level is a very good sign, all things considered. Yeah, IWM was looking good, and I started talking about it, and it got hammered. It was looking good. Ooh, okay, there you go. NVIDIA back testing this LOI right at 186.21. You know, if they weren't having earnings this week, I might have... I'm not going to get them cheap enough. I was going to say I might have opened a call and then swung some into earnings, but they're going to get too juiced. I don't like doing that. On a name like NVIDIA, I do not like doing that. It's not fun. I have more failures than I have wins trying to play NVIDIA before earnings specifically. Meta coming down near the lows. Microsoft near the lows. Apple could get a break here. Push to the upside, quick rejection, kind of forming a little bit of a double bottom, very similar to the SPY. Getting her that EMA sandwich, like I like to say. You throw the POC in there, so you got a big point of contention here with a range of like 20, 30 cents. So we'll see what happens there. You're going to get a big push one way or the other there very soon. Tesla went off my chart. There you go. Trying to find support right here at 411.61, my LOI on my chart here. Kind of forming, again, another... We're seeing like double bottomy looks here on your Mag 7 names. Today may be the day I open up my Amazon long. If you're in the Discord, if you're part of our Discord community, and if you don't know, feel free to check the link in my bio. I'll let you know. But today might be the day I open the Amazon long. Might be. Looking at the 50 MA, looking at the gap fill, obviously. This was wiry price action off of earnings. Earnings were pretty good, but it was very volatile. Now that we've come down on the volatility and we've picked a direction, that direction's down right now, I'd essentially be betting on a more or less a V bottom here. That's kind of what I'm eyeing here on Amazon. I'm not convinced yet, but it is something I'm keeping an eye on for an opportunity. I talked about earlier on the program last week how Meta offers an opportunity here too. I think where I'm looking to buy, because right now you're on the gap fill. So this is the other level I highlighted here, the 606.09. This zone right here, this gap to fill. That fills you at about 550-ish. So you have this gap right down here. You also have another gap down here at the 500s. Once we get into this range is probably where I'm going to start to dip my toes in. Obviously, I don't think Meta's going anywhere anytime soon. There are some concerns. They burn a lot of money on the Oculus, which there's two arguments there. There's one argument that they're burning a lot of money on Oculus and not having any returns. The other argument is it's an investment that they could make a lot of money in the future. As someone who actually really loves virtual reality, and I use it when I can, it's been a while, but when I can, it's really neat. I think it will get a wider adaptation, especially as peripherals cost less and less. I think that I saw the Quest 2 or 3, whatever it's called, on sale for $250 or something. So it's not even that expensive anymore compared to like a PS5 that's still $500, right? So these peripherals don't cost that much. And I think if they even use them as a loss leader, and where I think the real opportunity for Meta here is twofold. One, having a app store, so to speak, similar to Apple, where they'll take 30% of profits from any video game sold. Or two, developing their own games, or both, where they could have some sort of in a company game studio, like Microsoft buys game studios and whatnot, to make their own games. And then also, kind of like Apple's strategy with the Apple Store, taking 30% of every sale. So if they use their Oculus as a loss leader to put them in the hands of people and reap their money on the back end, I think that's where Meta has a real winning formula with the Oculus. I like it quite a bit. It has to be at the right price. That's why I said down here at least sub 560 is when I want to start buying, because there is still that risk there. They're still burning money on other ventures that have nothing to do with Facebook advertising or Instagram ads, right? Reels, whatever. Anything outside of that business, they are burning money. They have the money to burn. But a pessimist will look at that as like, they should stop doing that. They're burning money. An optimist will look at that as the opportunity to make even more money for a name like this. So I think Meta will be a very good buy, especially if you're an investor, if you're patient and get in at the right price, which is what I'm eyeballing down here in the like north 500, south of 570 area. That's kind of where I feel that Meta will find a real opportunity here near term, or not near term, long term on the market. Now, from a technical basis, it looks like trash. It's bearish. It doesn't look like it. It's trying to round out here on this gap fill. I do think it's going to go lower. And it kind of lost its status really as a Mag 7 name. It's only $1.5 trillion market cap. So it's obviously still up there. But it's not, when I say lose its status, I mean in terms of it being a leader. The market doesn't really care what Meta's doing lately in terms of price action, right? It's not helping by any means as it continues to the downside. But it doesn't, the other Mag 7 names, I guess is what I'm trying to say, aren't really affected by Meta's price action. Whereas if Nvidia has bad news, all the other Mag 7 names tend to get hit as well, right? It's kind of what I'm saying. It's not seen as a leader anymore. It still holds weight, but it's not a leader. Toby says, with the VR thing, I feel it's like the foldable screen phone. Same hopes, but kind of useless still. I disagree with that argument, mainly due to the fact that foldable screens could just be a fad. There's no practical application. And if I'm a company, so think of it this way. If I'm Samsung, if I'm Apple, and I make a foldable phone, more or less it's a gimmick, right? And there's nothing wrong with that. Like, it could be just cool to fold your phone. Like, oh, look what I can do, right? Okay, cool. You have a fun toy. I think it's a gimmick. When we talk about VR, you could argue it's also a gimmick, but the opportunity that I'm saying here to make money is there. A foldable phone, the only way you're making money is if you sell the phone for an exceedingly high premium comparative to your normal offerings, right? What I'm saying is to sell the VR headset as a loss leader, get it in the hands of every kid, every adult, whatever, where they're not only using this for like Zoom calls or whatever as a professional, right? Because we've seen that with Apple trying to do that. But they're mainly using this for gaming, which I've used it and I love it for gaming. I think it's fun. But again, Meta makes their money off of the App Store, or like Microsoft does, purchasing out game studios and providing or making their own games in-house, selling those games, right? So I think I don't think that's a comparable comparison, mainly due to the fact that a foldable phone doesn't offer. If Meta made a foldable phone, they could just make money off of selling the phone, yes, but there is no further revenue driver at that point. My argument is that you put the product in the hands of the people, and now you have, for lack of a better word, like a subscription service, right? You have the tool, but you can't do anything with the tool without the game. You need to buy the game, right? So that's why, who is it? I think it's Xbox, one of the big three, sell their system at a loss because they make their money on the games, right? The hardware doesn't matter. You could sell it at a loss because you make up the difference. I think actually the PS5 is actually still technically sold at a loss, because they're making their money back on like PS Plus subscription or games that you download in the store. They get their kickback, right? That's my argument for Meta. So I don't think that's a fair comparison, just due to the fact of like a foldable phone, you can't, unless there's specific foldable peripherals that can go on the foldable phone that you would be selling, or some sort of specific app or service that a foldable phone could offer, they're not comparable for that particular very specific reason. I'm arguing you're weighing the software, not the hardware, because you're focused on the hardware. So you're not necessarily wrong. I agree on the hardware point of view, but the software is where the money's made. Look at all of these businesses now that everything's a for lack of a better word, I was going to say bad word, but I'm not going to. Everything's a subscription. Everything. Long gone are the days where you could buy a CD and put it in your computer, or buy a tool or whatever and just use the tool. Now it's, hey, subscribe for $5 to use this every month. Subscribe to this, subscribe to that. And before you know it, you're getting milked dry. You're thinking you're not paying any money because you're paying $5, $10, $20, $30 here, there, and everywhere. And you lose all your money, but you don't personally feel it as a consumer. I mean, Adobe is kind of going through this right now where they used to sell Photoshop for whatever, $700, $800, $1,000, whatever it was. And now it's like, yeah, it's $60 a month. People forget about their subscriptions, right? So they're just charged forever. It may be seen as a cheaper value. So consequently, people don't feel the pain of that $60, even though, and I'm just using, I don't know how much it is. I'm ballparking $60. But the life of that product, the usefulness, the companies are making more money on the subscription versus just the product. So the argument there that I'm saying specifically for Meta is to focus on the software as the end goal, not the hardware. That's why I'm pretty bullish on Meta in general, but it stands to be seen where that goes just yet. Did we get our like goal? Let's see. What are we at? 11. I've got 9 now concurrent. It was at 15, so it dropped a little bit. Looks like we won't get the extension. Tisk. I'll give you guys 2 minutes. We'll see. If we can bump up. We've got 11 likes. We get 4 more likes, we'll go to 11. 4 more likes. Doesn't cost you anything, right? I'm not begging for money here. Just asking for likes. Interaction on the stream. I think it was a pretty good stream, though. Although I didn't take any trades. Walked you through everything. Talked about more the long-term goal of the market, which I think is very important. Spoke about Google a bit. Spoke about NVIDIA's earnings. Talked about OPEX. We talked about Meta specifically. I just went on a little rant about that and why I think it's a good long opportunity about $50 lower, right? A little bit cheaper. And talked about why I'm a bull on the market while seems like everyone's bearish and screaming run for the hills. I'm actually really excited to see a bull move on the market here long term. Well, medium term. And I think, as you guys know on this program, I don't like to say when things are necessarily bullish or bearish. I like to tell you when there's risk on versus risk off. I think, at least in terms of the risk to reward, if I'm weighing who the market favors right now, it still favors the bulls. And I would argue 7 times out of 10 you're going to favor the bulls. But I think it's for me to put my flag in the ground here while everyone else is seeming more bearish and say I'm bullish is a little bit, a little bit more impactful. So I think that's what I'm going to leave with you guys with today. I will be doing probably 2 more streams this week. I've got a few things I got to take care of. As you guys know, I'm doing a lot in the background. That, thankfully, we got some good news, so that's going to wrap up here in the very near future, thank God. So I have a few personal things I've got to take care of, but we'll be back to more consistent, at least scheduling, at least of shows. But this week, I will let you guys know if you don't follow me on X. Take a second over there. The thing's on the screen this way. Follow me on X. I'll also put a message out on YouTube where I'll be live again this week. Probably be tomorrow and more than likely Thursday. Thursday would be a good day to be live too because we'll walk you through what happens at the end with NVIDIA's earnings. So tomorrow and Thursday is what I'm going to be shooting for. I'll let you guys know later tonight. If you follow me over on X or on YouTube, I'll put a message out there if we're doing tomorrow. If not, at least definitely Thursday, and then maybe we'll do an after-hour stream or something like that one of these days. Or maybe we'll cover NVIDIA's earnings. I don't know. We'll see. We'll keep things very fluid and liquid. But you guys know what I like to say at the end of the day. Some say you need an edge to trade, while some say you need an edge to trade. Well, I like to look at things from a different angle. That's what you'll always get right here on the Atomcash angle. Hope you guys have a great rest of your day. Please trade smart. Keep in mind what I highlighted here on the SPY. Your 2 little chop zones here. Don't get too excited unless you're out of those chop zones. Otherwise, you could get chopped up. And remember, precision beats prediction every damn time. I will see you guys either tomorrow, but definitely on Thursday later this week.
Time has passed, and that's a wrap.